Hi, welcome to this video day, 15th of April, Monday. We're just going to be looking at one of our favourite types of trade setup, which is a breakout trade. And it's going to be in GBP NZD today. And this type of trade setup that we just really like. We always think it gets the odds firmly in your favour. So what we're going to do is go and look at the chart. But just please do keep in mind, it is my view. As of right now, it can change in line with the market conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 major Forex pairs, including the one we're going to look at now, you can click on the link beneath this video, get live access to our member center. Right, let's take a look at the chart. Right, on the GBP NZD daily chart, and in terms of the technical setup, I'll go through why I like it so much in a moment, and when I draw my levels of entry, stop and target. But first of all, in terms of fundamentals and sentiment, I think if you're trading any British pound pair, you need to be aware of what's going on behind the chart, because obviously a big impact, and yeah, from my point of view, just clearly favours the British pound if we look at fundamentals and sentiment. Let's take point number one. Article 50 extended to October, so there's 6 months extra to work out a Brexit deal. Chances of hard Brexit now are extremely low. UK Parliament want to deal. They haven't agreed what they want to do yet, but they will. Basically, the EU want to deal as well because their economy is nearly in recession. So, yeah, they're not going to want the UK crashing out without a deal. It will guarantee a recession. So basically, very low odds of a hard Brexit or UK crashing out without a deal. So the market, I think now, this is 6 months away anyway, are going to focus more on the data, and the data clearly favours the UK. UK economy data coming in above forecast, doing pretty well, and a rate hike is coming in response to that data. And the only reason we haven't had one is simply because of Brexit uncertainty, which is now starting to dissipate. Okay, New Zealand economy though is not doing well; it's doing badly. A rate cut is coming. The Royal Bank of New Zealand have already indicated that one will come. It will come. They're an export nation, New Zealand. Exports down 24% on last monthly data. It's nearly a quarter. Why is the data falling? Well, basically China is his major trading partner. That's slowing up pretty quickly. Okay, and that's going to weigh on the New Zealand economy. There's a lot of talk in the media about, if the US and China sign a trade deal, that's bullish for the Kiwi, any nation that trades with China. Not really, because the market's already discounting that a deal is going to be signed. So when it's signed, it's not going to have any impact. Also, we're in risk on at the moment. The stock market's near multi-year highs, but the NZD, which is a risk currency, cannot push the GBP down. And I take that bullish for the GBP. If we get risk off, which I think we could, then the Kiwi will fall hard. Okay, so the fundamental sentiment firmly bullish for me behind the chart. But what I like about this chart is these small candles here. They're tiny. The volatility has dropped right down. Okay, see it on these Bollinger Bands here as well. They've tightened up. Now, when you get low volatility, okay, you can normally expect it at some point to explode to higher volatility. And I think that's what's going to happen here. And in terms of the British pound, obviously bullish, where would we buy it? Well, I think the high odds entry is there, because it's had a real problem getting through 195, okay? I think now if it goes through, it will just continue up. I'll go to my target in a moment, but it was being rejected. You can see it. Now the tight candles or tight sideways range. Through it, we should go up on higher volatility. In terms of stop, let me draw a trajectory in there. That trajectory there goes where the 20-day moving average is. Prices will normally stay around the 20-day moving average where not too much volatility. When you get higher volatility, we'll move away from the 20-day moving average. So where could the stop be? I think the stop could be here. You've got basically 4 bodies that line up. Okay, 1, 2, 3, 4. So just behind this level. So I think the level is 192.50. So basically, breakout should go on higher volatility, stop behind here, then you can trail it up if you break to the upside. Now, what is the reward? Well, I'm going for chart highs, which is just below the 205 level. There's a reason for this, because all of this decline here was mostly to do with fears of the UK crashing out the EU without a deal. Like I said, the odds of that now are very low. And I think breakout, we should go on higher volatility up to there. It's a really good risk reward trade because it's got a 4-to-1 on it. Obviously, if my projection comes right, I really like the look of this trade. I've always liked doing tight, when you get tight price activity or low volatility, you know it's going to go one way, and volatility is going to increase at some point. Odds favour the upside, not the downside for me. So good risk reward trade. I like it. I hope you enjoyed the video. Thanks very much for watching me as usual. Take care. Have a good day.